New construction loan up to $3 million details, plus the industry-leading line of credit for builders. And there is nothing out there like this. Also, where you can get your funds and use them as you choose, withdraw from, and only pay on that amount instead of getting a huge lump sum and expected to pay back right away or whatever those terms are. And you're like, well, I have only limited time and I have to use these funds like this, and so much more. Hi, this is Michael with Viral Funding Solutions. I'm a business loan broker expert, as well as one that works very well in the real estate financing space, has helped out a lot of builders and people do ground up construction projects in multiple ways. And I also do a lot of fix and flips, multifamily, foreign nationals, the list goes on and on. But I'm going to help you today, walk you through what it entails to get a new construction loan with the best in this space. And I've vetted the best lenders and underwriters, just so you know. I have a very high standard. And I've been in a position like yourself where I'm looking for funding. And I was there some time ago for my multiple businesses. And I get where you're coming from and needing the funds, needing a line of credit, trying to get your project off the ground. Perhaps you're looking for land. So I'm going to go into that as well. So let's get into this. You see here a picture of a construction build, and it's a property being done and worked on. And then that person may have other builds. So this is just a quick example of what could happen. This is just a fictional example. Just go on with me. But there have been many that have come through me and others out there who received their funding. So over here, you can expect to get 3 different and very unique construction loan programs you'll see below, but you will get flexible underwriting. 4-day draws, so it's very quickly that you can get these. It can be from the start of the application to submission to underwriting, and under 10 days, at most 10 days, sometimes a little bit more time. But it is very quick, streamlined, hassle-free. Underwriting is great, so you don't have to stress out trying to go through some credit committee or some credit monitoring person who just has the hugest expectations of the world and is going to take more time, ask for more paperwork. There's another check on underwriting, and there's just so much. So, and reliable execution, so you can have faster builds and move through the process more fluidly and more easier, which means you'll increase your revenue, do more builds, and much faster, and feel more confident and certain that this is working for you. And you'll continue the process over and over, feel much happier, take some time away, relax, go on vacation. Now that you can step aside for a little bit, hang out with your friends and family, and do more things you would like to do as well outside of this. Now, underneath this video, there should be a button you can click on, but keep watching this for now. It might open an external window so you can check it out. But keep listening and watching to this till the end. And what will happen is you'll come across a questionnaire that I created on my site. It'll look something like this. It'll say, get the new construction funding your business needs fast. It could look different by the time you check it out. I may have added some things, but property address, property type, if purchased, what is the purchase price and down payment available? I'll ask for that. If refinance, what is the estimated value and what is the amount owed? So some of these fields may not be needed or necessary as how you see it. But closing under entity, LLC, or Inc., or personal name, amount of liquid assets that are available, how many investment properties have been owned by the borrowers in the last 36 months, how many new construction home projects have been completed in the last 2 to 3 years. And this is a part that I'm going to get into in a second, but the lenders, especially in a market like today and what could happen again in the future, is they're wanting to make sure you have enough builds, enough experience doing this. Now, I'm going to get into horizontal builds, which you're going to hear about here in a second. So if you're not the main entity, your business, that's what we're lending on, but you're like the financer or you have a builder. Well, it's going to fall on the builder. So you're going to have to get into a joint venture, joint partnership with them, and that builder and them, they're going to likely take on the personal guarantee. And so just making sure you run that by them and that it's okay. So this is why it's a vertical. If you were just a sole business entity and or horizontal, we can do those. Those are common. They don't always get funded. It's just per case base and it has to make sense. So if you're not the borrowing business entity, and also here's what I should say, in 2 to 3 years, so a lot of them want to see at least 15 builds. If you have less, more or less, yes, we can consider it. It's per case basis, but the more you do, the better. Specifically for certain scenarios on what you're trying to accomplish, they may ask for more builds. So if you're not the borrowing business entity and have a builder, please specify and how many they've completed. If answer to having a sponsor above, we need to do a joint venture. and sign a personal guarantee. This requirement, more often than not, is often rejected by the builder. This would be a horizontal but not vertical, so it's a need to be met. Is a joint venture okay? Again, that's on a horizontal, not a vertical build, unless you have it's just you or you and your co-ownership or whatever that is, and you don't have another external where that's the home builder or that's the builder, that's who it's falling upon, etc. If you're using a sponsor, what is their liquidity? What is your estimated credit score? Is the property generating income? If necessary, to add that. Rate and term expectations, your name, your email, your phone number, mobile preferred. Please describe your financial needs here and be as specific as you can. Is there new land involved, other parties, etc.? So it'll look like that more or less. Let's get back to topic and might come back to that in time. So we have new construction loan programs at a glance that let's go over. Financing bill for builders, interest only, no prepayment or minimum interest, no interest on undrawn construction funds, spec builds, model homes, modular, infill projects, and more. You get in-house construction management, 13 to 19 or 24-month term option, so it spreads it out good over the amount of time that you'll need. And a lot of the times, business owners think they need more time. In fact, they really don't. It's just that cushion we would like to have. Non-recourse is available. So vertical construction, this is ground up vertical construction with the lot purchase, single homes, or developments, Bridge Plus. So if I didn't say this already, there are ways of doing a build to rent, build to sell, however you best see fit. We can be flexible with you and work on those parts. Refinance a recently complete build while you want to sell or rent the property. We have build to rent. You build a new property or development and refinance for a DSCR strategy. So some good steps there, and you get the flexibility on the build of a new property or development. Why choose financing? That's the question. Why go through someone like myself, more so my company, outside of viral funding solutions, where I can connect you with the best lenders, underwriters, bar none, the best that are out there. I vetted them thoroughly. I communicate with the lenders all the time, my internal team. And so I'm going to make this hassle free for you. Outside of getting maximum amount of funding, the terms and the rates, the flexibility you'll have, the confidence and certainty that I bring, the experience, the versatility, the loyalty. In fact, I have a lot of loyalty. And if you're that person, I'll go even extra miles for you. But I don't like having my energy and time wasted like I'm sure you don't. So please, if you are serious in doing this, show up, allow for feedback, be open-minded, and be patient. I'll work with you. And when you fill out that questionnaire that I showed you, then I'll email you with your best funding option and options as you're seeing here today. If there's other things you need funding for as well, I'll have a business loan questionnaire in time. I might not have it down below, but if you have something you want to do towards the business, not a new construction, ground up construction project, we can look at those, or getting a lump sum in a different direction. We can work on that as well. So why do that? And besides that, my story, if I haven't said this, I've worked in construction roles. I've done manufacturing. I was once a 9-to-5 employee who was overpromised or under-delivered, you could say, and underappreciated and underpaid, like you perhaps were once, whether you're getting your first build or multiple. And I had to find a different way of doing things. And I had in my earlier 20s done construction stuff, manufacturing. Not necessarily was I the person who was in the cubicle doing the finance paperwork. Later on, logistics finance I got into and had to work harder up here and then move some media around for a contracting company helping HP and Peace Out and a few others. One of the biggest company downturned, or they were bought over, and had to go back on unemployment, and it wasn't a good fit. And I had to do the whole job search again, food stamps. I've been there before, and that was just in my earlier 20s. And I went to school academically, university and community. So sometimes you got to experience life. It's not always a straight line, and you got to learn from different people, organizations. And that's what I did under certain ones and with different ownerships and those owners that I had helped out as well. So why choose the financing as well? Designed for non-owner occupied residential construction, less red tape and underwriting. As I said, it's I'm not going to say less restricted is the right wording, but it is more so because we can get you alternative financing, things you can't get at a bank, things you can't get elsewhere with subpar lenders. Over here, you're going to get the very best in-house servicing, so we can look at it. There's more flexibility. I always say this when people are also getting business funding, like business loans, term loans, advances, lines of credit on those sides, is when we do more of an in-house look where I have already those direct lender partnerships. There's direct lenders, there's indirect, but I in a brokerage setup or in an in-house where I already have those direct lender partnerships. So when there's more of an in-house look, there's a direct lender and then there's an in-house look underneath that as well. So when there's an in-house person looking at it and multiple parties, we can service it much faster and it can be more diligent. Prioritize, we know your industry, we get it. We've seen it before time and time again, unlike others who wouldn't understand what are you doing with this project? How does this exactly work? So fast due diligence and closing. Fast construction draws, thanks to the in-house construction management and more management thereafter. So you're going to get that here and you'll be taken care of well. For new construction, SFR ground up construction here, you get up to 90% LTC and 75% LTV. So that's pretty good. And then there's always market shifts, and it may change, it may not, but that's pretty good. Rates go as low as 6.99%, relatively low. Loans, they go up to 5 million, perhaps just up to 3 million, like I said earlier, but they can go upwards of 5 million as well. It also depends on the type of real estate, what kind of transaction, and so forth, and how we look at structuring the deal. So simple in-house construction management, inspections, and servicing. You get fast, common sense underwriting. No fluff, no theory. Who's looking at my file? Are they worthy of it? Did they do it correctly? Yes. Our team, and I communicate with them all the time, and I get feedback, and I can be transparent and show that with you. That's another thing that I am. I'm a very transparent, like I said earlier, loyal, versatile. There's experience and there's reliability in all of this. So no recourse is available. Let me break them down even more since there is new construction, build to rent, and bridge plus. So for new construction, this is kind of somewhat going to blend that to what we said earlier. These are loans for builders with shovel-ready lots or tear-down projects, spec houses or model homes, infill tear-down or subdivisions. You get up to 85% LTC, 70% LTV. Loans are from 100K to 3 million. You get 13, 19, 24-month term options. And I know that 3 million to 5 million is be somewhat blurry, but again, it's per case, but 3 million up to 5 million we've seen sometimes. Non-recourse is available. Interest-only options. You're paying only on the drawn funds. For build to rent, these are loans for builders looking to build and retain property as a rental. You get single property and portfolio loan options. You get fast, simple closings on both the construction loan and the rental loan. You get 13, 19, 24-month term options for the construction, so similar to what we've seen before. You get 5 to 10, 30-year term options for a rental loan. So that's a huge difference when we're talking about months to years on a rental. So you decide you wanted to do that depending on the market conditions. I won't get into all of the reasons. I know many of them, but we can spend a lot of time on that maybe at another place in time. Non-recourse is available. Minimal interest during the construction period. Up to 85% LTC, up to 75% LTARV. Hard and soft costs directly related to the build can be financed. Costs that are not part of the actual construction cannot be financed. That including interest, loan fees, realtor fees, etc., not limited to. So for Bridge Plus, you can free up working capital with bridge financing on completed new home inventory or for model homes. So the thing that you're seeing a recurring pattern as we're going through this video, and we'll close up here soon, is you're getting flexible options. Not like other constraints, you get primary, secondary constraints, and that's pretty much it. We may have that, but at the same time, we're giving you the flexibility to choose how you decide to service your build, how you decide to move forward as well as in the future, readjust and do things. You get fast closing. That's what we're transparent on and we strive on. Exterior valuations, we'll take a look at. No prepayment penalty, up to 80% LTV, non-recourse available. 13, 19, 24-month term options, they are available. So reoccurring there. Single loans and portfolio blanket loans. Here are the new construction financing details. Let's cover this part on the new construction and build to rent details, which are similar. So we would like to see a 660 minimum FICO. Now, it's per case base we could look at. Experience is most important as well, but the credit experience, we look at those like any other type of real estate investments, fix and flips, etc. The look at the property, everything that has to be taken care of there has to make sense. Is it in value? Is it depreciating, appreciating? You've got to look at a lot of different loan scenarios for different types of real estate investments and more. So 660 minimum FICO, if that's something you do need work on, then I'll try to connect you with perhaps if you need personal credit resources or personal credit repair. And that's stuff that I can help you with as well if you're looking for. No bankruptcy, foreclosure, short sale, or deed in lieu in the past 3 years. Very important. I wouldn't say it's similar to what I'd see in an SBA, but no bankruptcy, foreclosures are two common ones. And those are a bit different when we're looking at an SBA ground up construction project. Maybe you turn that into a commercial property mortgage and you do more with it underneath that within a business. But those are different. SBA 7As are not used for rental or for, I should say, real estate investment purposes, more so for 51% owner occupied commercial real estate. And if you're looking for commercial real estate property, I can connect you with the right lender on that as well. I've done plenty of those. Now, here we have foreign nationals. Experienced borrowers are welcome with max 70% LTC and 60% LTC. New construction document details. Here's what we would look at for a line of credit submissions. First, a borrower and primary guarantor app. And these are things that I will communicate. I could share with you if it's the right fit. If we get to that stage and we go, here are the documentation, I'll send it to you like via email, like I've done for plenty. It's very safe and secure. I'll collect it, take care of it, I'll review, look at it before then send it over to the lender. And then with my internal team, we'll go to work on the back end. I'm doing a lot of stuff on the back end, just so you know. Borrower and primary guarantor app, as I said, guarantor app for all subsequent guarantors, line term sheet quote, track record liquidity, or get BOA approval, entity docs, operating agreement formation, COGS. And then you have ID. So these are things that I can show you. You'll know how the app looks like. I can walk it through with you, excuse me. Property submissions, property app by product, property term sheet quote, if purchase, executed purchase, contract, renovation budget, plans and specs for rehabs greater than 250,000 and new construction required before thirds can be ordered, contractor app after thirds. So you're seeing that all right there. Borrower experience through underwriting. Here's a tier breakdown completed for new construction transactions. So tier 1/ineligible for 0 builds. Tier 2, we have ineligible for 1 to 4 builds. I mean, like I said, we can look at it per case basis. Ideally, the more you have over 4, closer to 15 in the last 2 to 3 years is what they would like to see. So dividing that between those 2 to 3 years. Tier 3, 5 to 11 construction projects done. Tier 4, 12 to 23. Tier 5, 24 plus. Experienced fix and flippers, 13 plus flips in the last 3 years may be eligible. There you go. The land acquisition part of this. Now, this is probably what you're asking. So I have had people come through vertical horizontal build, and I have the right lenders for land. So the land acquisition direction would be through someone with Setanta Land Development, and they have a strong relationship with a certain individual or a certain lender that I'm associated with, and I regard to be one of, if not the best in the real estate space. So they work in tandem, they work together, and I'll share that with you in time if that's something you would like to know more about. But there may be a link, there may not be, but they have massively shifted in the vertical market to 8 to 15 unit counts at a 7 million minimum loan amount. And that can change by the time you're watching this, but market changes a lot. They can look at 4 to 5 unit counts, but can be harder. They have to really understand the land and how raw it is. Is it underdeveloped? What stages is it on? Are there hookups? Are there not? What part of the process is that? They have a strategic alliance with a certain company. I just put company X here just so you know. And that's something that I can reveal with you in time. May have more material underneath. If not, it's okay. Again, I'll reveal to you if I haven't already what it is, which you know about or you may not know about yet, through a joint marketing arrangement under which they're helping as many people as possible for residential real estate builders and developers. Through their partnership, builders will benefit from having a reputable and proven A&D lender to support the completion of horizontal land development before bringing in the team to assist with vertical construction and rental loan needs. Until then, that's when we go to work. That's our team. Setanta was launched in 2020 and provides land acquisition and development loans to developers all across the country. Their management team has over 40 years of development experience. Excuse me on that word. Some quick loan criteria. The land must be entitled with no discretionary approvals outstanding. 100% of lots must be pre-sold to a home builder, affiliated or third party. The developer must have a resume of completed projects as well as a pipeline of future deals. So very important there. A guarantor is suitable for a completion guarantee. Here's more. I may have a site there. I'll click here. We can see it very quickly. Satanta's right here. Development Capital, the home for residential capital, and loan lot program. You can learn about the team. Key terms up to 80%, 85% LTC, non-recourse. Loans for acquisition and development. Interest can occur or be paid current. Target markets, as you see there. You can be flexible with that as well, on what we see. Loan criteria and so forth. So we're going to close up here in a moment, but overall real estate financing details. Now I'm going to get into a combination, like with the real estate fix and flips. And if you think you've seen enough, down below, again, that button, and you can see more underneath that button. There may be more material you can learn about, maybe even see this document. If it is not there, it's okay. But I would get started already filling out that questionnaire that I showed you earlier. And once I get that email, I'll evaluate, analyze, and then give you a proper response back via email, let you know what's going on in the process. When we get to the point that you're ready for the documentation, and I feel you are, then I can send it over. And again, if you're serious, I don't want to be this whole I'm just giving you information guy. I get it. I just want to give information without expecting anything in return. I love giving you education without expecting anything. I'm detached from the money or the outcome. I'm not looking at that. I want to make impact on you and many others. And that's my primary goal. And I've been doing this for a long time in different subsets and different verticals, horizontals, business funding, personal credit, business credit, and many others in my other businesses. So I want to make sure that as well as I'm helping you, I'm not just going to just be spending time on something and you're just trying to find more information and it never goes into anything. And it's like, I was just the 30th person on your list. And even if I was the best, like you got to come to the conclusion. And for me, being on this side of the platform or on this side as a broker, I've seen it where the reasoning, I don't want to get into it too much, but character versus reputation. What I always see getting in the way are people themselves. So it might be something characteristically a personality trait thing. I've worked hard on myself in entrepreneurship and as a business owner. So a lot of the times what I see in someone else is what I used to see in myself, depending on what that is. But I had to work hard on myself. And sometimes the person on the other side, not necessarily always me, I'm not saying I'm perfect, but I've worked on myself enough to know this, that the person on the other side that I'm trying to help normally gets in their own way. And so I'm not going to be this whole back and forth on call this. It just doesn't go anywhere. And it has to make sense for me to even do a call with you if it makes sense. So if it's most appropriate, I've financed deals just through email, back and forth, finished the application, sent in, reminded them, what are we on here? Email, boom, done. I've literally done that here, business financing, and you're getting to see me in the flesh. I'm an introvert. I prefer to do a lot more writing and behind the scenes system engineering, iteration. I like that kind of stuff, but I have to market myself in some ways, right? And you know that as a business owner, perhaps. But overall, real estate financing details. If you're in the market for true real estate financing from one of the best lenders to do it and to leverage my partnership so you get the boost and with the hassle-free underwriting process, then this is going to be your go-to solution. Here's more on the different services provided and what you can expect. Starting with fix and flip, first distressed properties banks won't finance. You get up to 92.5% LTC, and that changes and can vary, and 75% ARV. Rates are as low as 6.5%, so somewhat similar to what we saw earlier with construction builds, a little bit lower or so. Loans go up to $3 million on this one. Non-recourse is available, closes in as few as 10 days, a 13-month standard term for fixed to rent loans. These are loans for investors looking to buy, rehab, and hold rental properties, or BRRR investing. I know how that may have sounded. Buying, renovate, rent, refinance, and repeat. Here's more details to it. You get single property and portfolio options. You get fast, simple closings on both the construction loan and the rental loan. You get 13, 19, and 24-month term options for the construction of it. And similar to what we saw earlier that I'm saying, so I'm going to kind of just beat through these 5, 10, 30-year term options. For Bridge Plus, we already have learned that. We just look at it from a glance. Fast closing, exterior valuations. For rental single loan portfolios, 80% LTV, purchase and cash out, non-recourse available, 5 and 10-year ARM, options included, 30-year fixed IO. Loans are from 50K to 20 million. More for single rental property loans, one rental property loan for one loan. You get loan amounts from 75K to 1 million, so plenty of it. You can get 5, 10, or 30-year options. You get flexible terms and interest rate options. You get up to 80% LTV on the purchase and the rate/term refi, up to 75% cash out. No personal income requirements, so that's an advantage. For portfolio rental loans, 2 or more rental properties, 1 loan for it. There's no maximum loan amount or unit count. You get 5 to 10, 5, 10, or 30-year options, excuse me. You get multiple structure options that are available for you to fit your unique investment strategy. Fixed rates, ARMs, fully amortizing interest only, or balloons. Non-recourse is available. Flexible prepayment options as well are there on the table. For short-term rental loans, you get up to 75% LTV. On purchases, you get up to 70% LTV or cash out refinance. You must, though, have 12 months of short-term income verification. Of course, how do you plan to service the debt? And we want to see what you have also on hand. 1.5 plus DSCR, 700 minimum FICO score. That's a bit higher for the short-term rental loans. And again, what you need to do, get a person that can help or get your credit up. That's ideally a part where it might be repair or another form. You get 5, 10, 30-year options. Multiple structure options are available. And again, to fit your unique investment strategy and grow your portfolio. You get fixed rate, ARMs, fully amortizing interest only, or balloons. For multifamily value-added and stabilized properties, up to 85% LTC rates are as low as 4.5%. Non-recourse loans up to 20 million. Fast due diligence and closing. Let me break it up in our 3 services for multifamily. I'm just going to have you look at it quickly because we're pretty much done here. For value add bridge, we can do this for loans for investors buying distressed multifamily properties that need capital expenditures and rent increases to stabilize and bring value to current markets. I won't go through the details. You can see it there. Maybe rewind the video if you need to. For stabilized bridge, for turnkey tenant properties that are new seasoning and or further tenancy before long-term takeout, you see there at a glance. For long-term hold, financing for investors looking to hold and cash out their stabilized multifamily property for the long term. At a glance there, 5 to 100 units, all market sizes, amortized and interest only, but a few more. Construction, we already went into that part. For a rental application for like a single family home or similar, here's a kind of an overview of what we'll need in documentation and underwriting. You can see there kind of what we already went through before, more or less. And you can see there on the expectations. So next steps, you would submit the specific real estate new construction build questionnaire below so I can be able to evaluate and analyze it. So you might see this, if not, but there may be a button. There should be a button underneath this or a link to click. And you should come to this. The page may look different, as I said, but go ahead, get that started, fill it out. I will get it in my email. I'll connect you with you again back via email and share with you what the next steps would be if this is something that would work. Myself, maybe I check in with my lender just to double check, not always, just to see market conditions and a few things if they've changed for the service. But it's all there as you see. And if this does interest you, if you're somebody who is ready to move forward, is like, well, I need to get my new build. I need somebody who will take care of it for me. I don't want to go at it alone. I don't want to go through these people who will overpromise and underdeliver. I'm tired of people who I can't rely and trust upon. They're not loyal. And if you finally want to work with somebody who is very cautious, punctual, and disciplined, I won't waste your energy and time. I don't like mine having it done that way either, wasted. So if that's something you're interested in, look down below in the description. I'm used to saying because I produce content on video with YouTube, but look for the button down below. Maybe you're watching this on YouTube, perhaps. So look in the description, the button below, click there, go fill out the details. And it may look different over time. It might be that questionnaire, it might be something else. But look for there for the next steps to get started. I hope you got value out of this video. And for all else, please feel free to ask me any questions. And I'll make sure to get back to you as soon as possible. Maybe you have other projects in the works. Maybe you have another entity you need to get business funding for, whatever that is. I'll take care of it for you. I've helped out a lot of people, and there's a lot of people out there who are out to get you. Their only interest is making a high commission. That's not what I'm in it for at all. I care about you as a person, literally. Excuse me, who's the human and who am I working with? And I just don't always accept anybody and everybody. I've gotten to a point where, you know, there are tire kickers, there are pretenders, there are then action takers, pretenders who become action takers. And I don't judge anybody, but I will, again, won't have my energy and time wasted. And that's a standard that you should have as well as anybody else. So again, appreciate you. Thank you for joining me today. I know it was an extensive video, but hopefully you got the content out of this that you needed. And again, look down below to get started, and I will talk to you soon. Take care.